What's up, guys? It's September, and it's very nice already, right off the bat. Um, Talked about it in the last video. Expected these big trends, expect a lot of volatility, good, clean, nice stuff. Uh, we didn't waste any time. I'm going to show a trade that I took in the live session, which was the only trade I took last week. One trade, and that was buying the Australian dollar on this day around here. I'll show the entry and getting out on Friday. So which is what was here. So we're off, right? Um, let's take a look at the entry. Now, before that was, long story short, we were in the end of August where there was that, finally, that dead period where things were really ranging, right? This stuff generally across the charts the last week or two of August. Before that was great. And there were still some range trades maybe during that time. Then we get to September 3rd. But on the Australian dollar in particular, there was some accumulation, some buying in the background, strength, aggressive buying there, strength. If you kind of look through, um, so I was leaning towards, okay, something's built into the background here where they're obviously expecting this to break out to the upside in some sort of longer term situation to buy this thing. Again, I was talking about it a week or two before this happened. Now, this did happen on other pairs, but this is why I was particularly focused on this. This is why it was such a clean move. As I talk about strong trends, bounce off the 14 EMA. It did it 3 days in a row. Still hanging out up there. So the background was leaning towards bullish on this. I won't get into everything back there. And it kind of gets into the weeds too. Like, let's just put it behind us. End of August. Sideways range. But I was leaning bullish here. Now, let's go to the September 3rd was the entry, and I also want to show, again, we were talking about in the live sessions at least a week before this happened, because of the slow accumulating of the Australian dollar, every time it moved down towards the end of August, there was particular focus on buying the Australian dollar. So I was looking at that. Why is that? Is there anything big coming up? There's an interest rate decision, one of the biggest things. It wasn't a huge move considering it, but one of the biggest pieces of news influence you can get, of course, is the interest rate decision. So there was one here for the Australian dollar, and looking ahead over the previous week or two before this, I said, they're expecting this to move up on the interest rate decision. Again, the charts told me this. We talked about it in the live sessions, and we've actually figured it out and said, okay, what's coming up? All right, they're buying, anticipating that, right? Now, that's the charts telling you, at least a week in advance. I have witnesses, everyone in the room was there, that on a news release, interest rate decision, that we had already projected a bullish response. Now, compare that to a fundamental trader who knows what they're going off of. If things are priced in, they're not priced in, whatever. So there were those out there who knew this was coming and showed what they were doing, which was, again, accumulating. And why would you accumulate? Again, and this is something just to keep in mind. It's really logical stuff. If you have a big piece of news coming out for something, interest rate decision, non-farm U.S. whatever, payroll, anything high impact, especially the big stuff, and you don't see any fear of getting to the market on the day of, the day before, or if it's a slow time like end of August, just kind of building up over time, knowing that this thing is looming, and if they're building up long positions with a big piece of news coming, they're not worried about it. Otherwise, they would not be doing it. And obviously, they're expecting an up move if they're doing that. And that could happen, on a smaller scale where it's not spread out over a couple of weeks, where, there's not much of a move, but there's a lot of strength coming in. And then U.S. session has some high impact news. And so for the hours leading up to it, you're seeing down moves hitting buyers, hitting strength, right, as we know. And that's saying they're not worried about it, but really telling you they're anticipating an up move on news. It doesn't have to immediately move up the second news comes out, because we know how that works. I've talked about that. A down move on bad news can just attract more buyers, right? So you got to get your timing right and stop loss and everything. But that's the logic, right? If you see pre-positioning before news, strength or weakness in the background, and they're not afraid that news is coming up, because there are other times where they are, right? Things will go flat, Things will go sideways. You'll have conflicting situation, just waiting, right? So if you can track large positions before news, that's going to tell you likely where it's going to go. Now, I don't trade on the news release. I'm either already in, which happens, or waiting for it to settle down and behave normally again, and use that piece of news and typically higher volume now to go forward with my analysis. Um, so not to dwell on news, but there's the interest rate decision. And we never went below this point since that, right? It was all up, 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 up for days and days and days and days and days till Friday. And we're still up there here on Monday open. So now the entry. And again, we have the tools for entry. We have the sort of the template that we talk about, the strength, the no supply in the situation of we're buying. And sometimes things don't always set up the way the template is, right? Anything that veers off, as I say, if there's something different from what we see in the setups, we can understand what it is and logically figure out what to do from there. So whether it's do nothing or whatever it may be. So going forward, first of all, just look at this day, right? Some lower prices brought some higher volume here. There's the interest rate decision where there was a pause before that, but up it goes. This is still pre-London Open. Strength on a down move. New low ground. Excessive activity here. And then this. So we're seeing, this real, not be a trap move, and the buying into these moves and strength here. And this is a little fake break pattern, I suppose you could call it. Once we had that. And a little 618 overshoot, I suppose. I forgot all the analysis that was there. It's Sunday night now, Monday morning. And this was Tuesday, the last trade that I entered because I just held on to it. Okay, 618 overshoot. We know that pattern. That went really far, but it had the right reaction. The higher volume and immediately showing this is a failed, right, attempt to break a 618 overshoot. If it hung out down here, as I say, that's another story. This reaction is very important. And of course, that was perfect there too. So we have the volume, we have the reaction, we have the 618 overshoot, we have a fake break pattern on a 5-minute. That doesn't hurt, right? All this stuff sound familiar? And again, we're going along because of what was building up to this position, to this situation. The interest rate decision proving to be bullish, the buying into the down moves, and then our pattern shows up. Now, check it out here where coming off of strength, this was 50 minutes into London session, and we move up, and as I always talk about, the 14 EMA test for sellers, and that's where you want to see low volume, right? High volume here showing buyers, high volume into the down moves and the rejection, and then the pause by the buying and the test for sellers, and the volume really representing the amount of sell activity once you reach the 14 EMA, which is this guy right here. They happen to be sort of jumbled together, but 14 EMA. Now, look at the reaction when we got there. Kind of flat, and then the next guy had a bit of increase in volume. Now, in real time, we were doing the session. This made me not enter, right? Again, pushing up here. Now, the point is we want low volume on the test. Now, if we highlight the areas that are the test candles, do we have low volume on the test? Nah, not good enough, right? At least not yet. Sort of medium volume, right? You think of it as the lower the better in this area. So patience, patience, patience. Everybody gets to see when I enter trades in the live session how damn patient I am. Really patient, like holy shit. I can only imagine what people are thinking. Is this guy even going to get into this trade? But I did. And here's where. So, as I say, if supply shows up here a little too much, like we saw, a little too much activity on the test for sellers, this volume here represents sell activity. Buyers pause and test. It can clear up in basically one of two ways, or kind of both, which is staying in this area and having volume drop off. That's the first thing that did happen, right? And what does that tell you? The sell activity here, whoever was looking to sell in this area, never mind why it is, that's a whole other conversation, but it's an area that's going to bring sellers if they're out there. It's the first sort of checkpoint. Now, to see them active to some extent and then disappear tells you whoever was willing to sell in this area is now dried up. Why do you get such low volume here? Because the buyers are buying into down moves, right? Remember that? They haven't switched over into markup yet. And the sellers in this price area at this point become dried up, meaning whoever's looking to sell in this price area is in. There's very little. So that's why we sit here for 5, 10, 15, 20, 25, 30, 30 minutes on extremely low volume. As I call it, it's thorough testing. I like it when it does that. If it can sit there that long and not move down and not show increase in activity, we're just getting this guarantee that there is little to none. There's not none, but very, very little sell activity. We talk about the imbalance, right? So buying active, selling inactive. Now, if we move up into, now this is the automatic rally, right? We know this on the setups. First level of resistance after strength. And pushing through that off of lack of volume on a test, which again took a little time for that to shape up, is here. That's the push through. And as I talk about, that shouldn't have high volume. Otherwise, we're seeing potentially weakness and a fake break and a failed markup attempt. But in this case, we push through. Now, just like lower prices tell you about buyers, higher prices tell you about sellers. So not only did the selling dry up here, higher prices didn't even bring any sell activity as far as any weakness coming in, right? And my entry, it's basically a push through entry, right? I think it was on that candle. Again, I did take it in the demo. It was like a couple of minutes late after I actually entered it, but I like to document in here just so I can pull it up. So there's the entry, and the price was 38.6. So yeah, this plus spread. So, but you see the pushing through the automatic rally on low volume, right? Look how low that is. That's telling you about sellers. This is telling you about sellers, right? So that's the entry. Now, whatever the chart says as far as targets, by the way, just to talk about one more thing, I was looking at, first of all, the stop loss was down here to allow for a fake breakout, right? Same old thing. The risk reward is ridiculous in this situation. It was not a problem. And my position size was done accordingly with the stop loss, which is not much bigger than usual, slightly bigger. Now, I did leave a little room if we did come down here and actually do this fake break, right, with strength. If that happened, there would be a very high probability. It's almost helping the situation even more if that happened, right? And to be able to add a position to that, this is something worth mentioning in this kind of situation. I like to buy low, but this wasn't as low as we get. The lowest would be a fake breakout, a real breakout. Then we let it settle. I don't chase, but that would be the lowest possible point where the whole thing sort of falls apart. If you kind of back out and see that, all right, that's going into new low ground. And if we're really accumulating and we're really seeing the right thing, we would see large buying there. And if price went there, in hindsight, it's very likely that obviously very large buying would come in, and I would be able to add to that situation. Is my point. Let me get right. And if there was a setup here off a fake break, no supply entry, I would have this position on and this position on, right? Keeping in mind when I entered this to leave a little room risk-wise for this, but the risk on this entry, if it's set up here, let's say the pattern, very small. Right? Stop loss stays the same, allowing for the fake break. Now, it just did a fake break, so I allow for another one. So just to talk about that, scaling in that way makes sense. Now, once I was in the AJ, someone asked, would I take another trade on the AJ the next session and the next session as we were, looking for trades on the next day. And I was not going to worsen my position, so to speak. So as this trade is moving along from here, I was not going to look to buy on a sign of strength, fib retracement or whatever signal in here, because again, that's just worsening my position. And once I got out of here, I had no risk on the trade. My stop was at break even, and it was all about if, where, when large selling is going to show up, which didn't show up till here. I'll get into that in a second. All right, so I don't know. Actually, I guess we are talking about targets now. Okay, so I wanted to show that additional entry opportunity that I may have taken advantage of if it did the big break there. So let's just back out. We're looking at a double bottom fake break on the daily chart before this entry. Okay, entry is on this candle. So this is a big old accumulation through, again, through August. And the charts will back that up. And notice this pattern. It's a daily chart, right? Strength, 14 EMA test did bring some supply. We just talked about this on a 5-minute chart. Yes, it's fractal. Yeah, the 14 EMA is where the selling is active, the buying is inactive in tests. You get the low volume this time around. Then you get the fake break. Come on. This is the daily chart. Now, when I see this on a daily chart, I got to get in there and confirm. But it did confirm this actual strength in there. We know this pattern. If this is a 5-minute chart, we're looking to buy, right? From a daily pattern, right? We know this pattern. This would be automatic rally. So we could just be starting the markup in the very bigger picture. But I did close the trade out on Friday. But I'm just pointing out, daily chart looks like our 5-minute setups because these patterns are the template of how it works. Practically any time frame, even the 1 minute. So, okay, targets. Again, only because the chart was suggesting this, not because I just draw big fat targets for no reason. We had this marked up. That's where it reached on Friday. 50 EMA to the fib area. It's Friday, and it's time to get out. Unless you want to hold over the weekend, whatever. But that was, all talked about in advance. We also marked up this in advance as an area where selling may come in, and it was so, it just kind of made it through. What I want to point out, also on managing the trade, is when we were here, right, not quite at the target, but hitting some resistance level, fake breakout to get me out, right? So like moving a stop up behind this makes this a failed attempt to mark up, failed attempt to continue the markup, right, off of some weak. But if you can't do a fake breakout and it stays above the previous resistance, right? So this is a bearish pattern to get to this point. This is just a simple fib retracement, 14 EMA, right? So again, start talking about managing trades. 618 overshoot, 14 EMA, right? And if price hangs on there and continues, right, in a bigger picture where you're sort of giving it some room to trail, that's all good. We know this on trends, right? But if we're breaking here or here, fake breakout, right? And at this point, price is here. I'm looking at that. So it's really, about 20 pip difference. But I wanted to hang on. I had partial profit, no risk on the trade. All right. Well, going forward, finally on Friday, we hit some weakness up there, which I always talk about this. Late on a Friday, you're going to get getting out of positions. And if you know that smart money is long, in this case, then you're likely going to see some weakness late on Friday. It is what it is, right? I was one of those people getting out here. It's also 50 fib, and it's likely going to attract some selling. So it was so very, very clean and predictable. Now, Monday, I'm sorry, this is Friday. I keep thinking today's Tuesday. I normally open the charts on Tuesday and not even look on Mondays. But it is Monday morning now. So this was Friday. But this was Thursday where it hit the fib, and we actually saw weakness coming in this area. Again, it's a situation where you could move your stop up. If this fails on a fake breakout off a fib, you're out, right? But if it stays above here, you have a break test continuation, and that is a bullish, and the 14 EMA still holding it, right? So as far as managing trades, this stuff is going to be coming up in the strong trending environment that we're just starting to get into, and how to hang on to these things. 14 EMA, fib zone retracements and stuff. All that stuff's going to happen during trends. If you want to hang on to it, right, you want to stay behind that stuff. Particularly once I have partial profit taken and no risk on the trade, stop at a break even. And we have some larger targets that are there for a reason and all that. But at this point, we did see some weakness come in here. And the result, again, we revisited here without much activity. This guy is, I don't know if that was news yesterday, but we're hanging out at the high prices. That's the main thing. If you're in an uptrend, looking at the highest prices, are we accepting them or are we rejecting them on high volume, right? And we're accepting them. We're still very bullish. Um, so going forward into next week, and that's just the Australian dollar, but these guys all had their deal, and the market, again in August was different, and then immediately got to September, went right back to normal, where now the weakness of the U.S. dollar and the yen are what's driving these up moves. It's not because particularly one. Now the euro was a bit weaker maybe than the Australian dollar. There were some picks that were maybe better than others as far as getting into the trend, but they all ended up doing it. Um, I guess the U.S. dollar was a bit stronger than the yen, which made the AJ the better option anyway. With the yen being really the weaker of the two, so it was a good pick, and it was clear. What else? So that's it. It's nice to get in one trade and get in on Tuesday, close on Friday. Get much better than that. Um, so going forward, it's likely going to stay bullish unless I really get convinced of some serious high volume weakness. Some of these guys did see some weakness to some extent. So, and we did see some on AJ. We definitely did. But we're floating up higher on this, and that I'm not surprised because, again, I talked about the sort of long-term bullishness that the charts are suggesting with the Australian dollar itself, interest rate decision backing that up. But these guys, as you can see, have had more of a retracement, right? So the charts don't lie. That's why this guy's hanging out up there. If you find yourself in a long trade, a correct long trade with the Australian dollar pair, you might want to try to hang on to that one. And that, again, was my plan going into last week. What else to talk about? So maybe I'll make videos. So going forward, I'll wait for information on Tuesday. It's only Monday. Probably not taking a trade today. Tuesday, London Open, I'll be on doing the live session. You can always join it. And I'll see where we are. If we have some weakness showing up generally across, then I'll look for retracements. If it's very high volume weakness, then I'll be looking to short. Let's really take it as it comes. It's not a runaway. These are not just runaway trends with no weakness, right? So we'll take it as it comes, either a retracement or a reversal. So I'm thinking I'll keep making videos. This is probably the most helpful thing I can do for people that have bought the course, which, it's been out for a couple of years now. So it's a lot of people. And, recently the price has been lowered. So I know it's a lot of people. And the best thing I could do is, right, since the course teaches everything, is to just keep showing live examples. You get variations and just showing the trades that I take. So I think I'll be doing that. I should, right? One video a week just to kind of show all the trades that I took, win or loss, the trades that go on in the live session or any I take on my own, which is, later on in the day towards US Open and stuff sometimes. That's the plan. Any questions, anything you want to see, let me know. I know somebody wanted to see a Bitcoin uh, crypto analysis. I could do that. The same stuff applies. There's slight differences on how I approach it and how things tend to behave, but it's 90% the same. Um, that's it. All right, guys. So you can always join me in the live session. Course is available. Um, and again, I'm looking forward to really, really good stuff. Um, you learn to appreciate these times when you've been trading a long time and you have, 4 months of dead activity or uncertainty and who knows what. And then you start to recognize and know when you're in the good times. And this is it. So I'm excited. September is not disappointing so far. All right, guys. Let me know anything you want to see in the comments. Like the video if you liked it. And I'll see you in the next one.